Hey everyone, it is Evan here from the Trade Risk on Friday, July 27th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So lots to cover in today's video. There was quite a bit of activity and action this week. So let's jump right into it here with the S&P 500 cash market weekly time frame. This is where we like to start our analysis. And you can see here on the week, we did finish higher, 58, a little over 0.5%, 58 basis points to the upside. So if we zoom in just a bit here, what we'll first notice is we do have a bit of a tail here on the top end of this week's range. So we did get a pretty good sell off of the highs from this week. And take a look at this yellow line here. This is something we've talked about in the past two videos now. This was last week's highs. So remember, we had this very tight range kind of doji week last week, and the highs were around 28.17. We closed at 28.18, so right above them, but still right at them. A nice little short-term reference point, and you can see a bit of a magnet there for the market. But when we close that off here, we just look at the action overall. We're up 4 weeks in a row, and volume's been pretty light here, but we are still holding above this 2800 level. That's the big level that we want to see this market hold up above to stay as bullish as possible. And it's really 2790 to 2800, but right around this area right here as it coincides with prior inflection points. And the fast moving averages here on the weekly time frame are still rising. So we do still have price above a 8 period, which is rising above a 20 period, exponential moving averages. So that is constructive. Bulls are in control, but certainly a little indecision here as we see this nice fade off of the highs. So let's go down to the daily chart, look at things a little bit closer. And first thing we'll notice here is Friday's session. So we did get the majority of the sell-off, the give back, all happening really on Friday. What we saw take place this week was constructive action really right out of the gate. On Monday of this week, we did finish higher here. We finally put a little bit of a reversal as we came off of like a 3-day pullback into the end of last week. So we had a little bit of a bullish reversal here on Monday. We popped higher on Tuesday, and then we accelerated higher on Wednesday. Now the interesting note for me here, or the interesting day to take notice, was this Wednesday when we saw this acceleration 1% to the upside. And what happened there was we cleared above Tuesday's highs. And remember, Tuesday was that very sort of mixed session. We had this nice pop up, but notice we closed well off the highs, closed off of the lows, and it would just kind of closed exactly where we opened. So there's a little indecision, a little bit of something for everyone there on Tuesday. And then we blew by that for the bulls right here on Wednesday. We accelerated higher. We even filled this gap going all the way back here, if you recall, from January 29th. So this open gap here, we just about filled it, and that was the extent of the rally here. We closed at the highs of the session on Wednesday. We saw this gap lower in just a very quiet Thursday session, and then on Friday we started to pull back down, and we lost and we closed back below Tuesday's highs here. So when I look at the S&P 500 here on the daily chart, again, really not a whole lot, if any, technical damage here. The trend is still higher on the daily chart. We could draw this trend line here. You could draw it a few different ways, but if we just simply took the slope of the lows here from the end of June, early July, all the way up to current prices, you can see we almost tested this trend line, depending on how accurate you want to draw this. But we basically came back down and tested this today. It held. We pushed off just a little bit, closed off of these lows. And notice we still have rising, strongly rising 8 and 20 period exponential moving averages. We closed right at the 8 period, but we're still in this bullish trend. So if Friday is a start to potentially a pullback, we're going to need to see this trend line broken. And then again, we have that 2800 level, 2790 to 2800. We have some support here, some structure here going back a couple of weeks and months. So that is the area, this bullseye here. If you're really in the bear camp and you're looking for this market to roll over for the S&P 500, this is where you're going to want to see the breakdown occur. You're going to want to see follow through through selling next week, ideally on continued higher volume, and you're going to want to see this level taken out to the downside. And on the other hand, if we want this market to continue to rise here, if this trend is going to persist, then we have this nice neat trend line that can carry us back higher. And then eventually, we get the highs from Wednesday around 28.45. And then if we zoom out a little bit further, we have the all-time highs right around 28.72 back from January of this year. So that is the S&P 500. Those are the levels to pay attention to right in here, getting close to it, a little bit of mixed action here. And I think the real sort of interest, or the real sell case, the bear case, is when we start to look at the Russell 2000. And this is something we outlined a bit here on Tuesday when we did our midweek video, because Tuesday I think was a significant day. We saw a uptick in volume and we saw a bearish engulfing bar. So that means we opened up higher above the prior day's highs, and then we closed below the prior day's lows. And we didn't just engulf Monday's session, but we also engulfed Friday's session and Thursday's session from last week. So we had a 3-bar bearish engulfing candle here on Tuesday, and right into this support. And this support here around 167 or so, that is a level that we've talked about in the past as well. We just recently found support here in mid-July. It was also where we found support in mid-June, and the market kind of slammed down into it. Buyers stepped up, and we had a nice Wednesday, Thursday pop. If you watched our trade ideas video on Wednesday, the Russell 2000 was presented as a short idea. And we even talked about on Wednesday that ideally we would see a little bit of a pop here, and then this next move down, if we started to break below this 167, 166.50 area, this would be an actionable spot to potentially put on some short exposure. That is what we did here on Friday. We did get short the Russell 2000. We are short the Russell 2000 via TZA. So it's an inverse ETF. That's the way we like to play our short exposure, is look for those inverse ETFs in the market. So we are currently short into the weekend. And again, we're not married to this trade. I know there's a very heated kind of bull-bear debate right now, and everybody's married to their sort of stories, and that is great to have conviction. We are simply looking at this for a trade, very objective. If the IWM next week starts to reclaim 167, really our stop is up here around 168. Essentially, if we can negate this bar here on Friday, we are out of this trade and we will take our loss and move on. If it doesn't, however, we will look for continued rollover action, and our first target, our sights, are certainly down here at the July 2nd lows. Not saying we have to get there, but that's certainly where our reference point would be for some profit taking. So that is our trade that we have here in the Russell 2000. We got shorted today on this breakdown, and notice the uptick in volume this week. This is too high. Most people would consider this distribution days. In the past 4 sessions, we saw 2 high volume distribution days with an expansion in range to the downside. So those are, again, some clues and context for why we are in this trade. So that is what we're doing here in the Russell. We'll see how it works out for us next week. Next up, we got the Nasdaq 100. Nasdaq 100 also suffering this week. So we saw the selling pressure really pick up here on Friday. Again, a high volume day, and we broke down from a couple of different near-term levels. So the highs here around 181. This is where we accelerated higher again on Wednesday. And the thing I like about, for even the short case on the Qs, if we go down to an intraday chart, look at this big gap here from Thursday that never got filled. So we have this downside gap that we opened up on Thursday, the 26th, and we really just couldn't see enough strength. We didn't get this filled, and we proceeded to roll over here. So when we have this nice open gap, it does give us a little more urgency. It tells us that there's probably some supply up here that is trapped, and this market could start to spill over a little bit quicker. It is at support though, so we're at another support level here. Is 178, 177 level. This was the highs here from June. It was support back here here on the 17th. So the Qs, again, coming into that 20 period, it's tough to see this just completely roll over here, given the way these moving averages are aligned. But given, we did have that bearish gap that wasn't filled, there's kind of, you have evidence on both sides. So, you could really make a case depending on some other factors and evidence that you're looking at, and if you're tactical and if you're short term, to really be kind of playing for both sides of the fence here. So it's really a mixed market, and there's some good there's some good evidence on both sides of the case here for the Qs, but for now I want to respect this large range expansion to the downside here on heavier volume. I think you got to be careful there, even though we are at what should be some short-term support. Again, maybe it's almost like the Russell 2000 saw, where it had its slam down on Tuesday, and then it sees, maybe the Q sees a day or two a pop back up to 180, and then maybe a move back down would be the actionable short entry there for the Qs. But that is the market overall. It's some mixed signals. You got the SPY, which finished green on the week, 64 basis points. The Dow finished 1.5% to the upside, but then you have the Russell, which was 2% lower, and you have the Qs, which are almost 1% lower. So it's a mixed bag right now, which doesn't always make it easy. We're going into the end of the month. August is next up on deck, and August seasonally is a fairly challenged month in terms of seasonality goes. So I think there's lots of interesting trading and price action ahead of us. The one comment I will also make here before we move into some of the other markets is, if you told me that Facebook would be down 20% on earnings, a company the size of Facebook, I am actually still pretty surprised at how resilient the market took that overall. And the fact that we are still kind of holding up in uptrends in most of these markets. Granted, we're testing the uptrends right now. So for the Qs, you can see we just closed, we did break below this trend line here. And this is where we really want to see, we get this horizontal support. We want to see if this can get follow through next week, or if this is a little bit of a panic kind of washout here. But the fact that Facebook could close down, over 20% this week, see what it closed down. I guess it only closed down 17% this week off of that progress it made early. It's still pretty remarkable that the market held up pretty well, but there's some mixed signals here. We'll have to see if some of the selling we saw on Friday is the start of a move, or if it's another false signal and these uptrends do continue. So long-winded way, let's get through some of the other markets here now. TLT, we'll go there next. You can see here on the week, 1% to the downside, following through to last week's breakdown week. We saw 1.6% to the downside in TLT last week, breaking this rising trend line. More follow through, slight uptick in volume. We were very firmly back into this range, on the verge of a breakdown here with sellers picking up momentum. So give the credit to the sellers. At best, we're still moving sideways in between 117 and 123. It's on the bulls to put in some type of higher low here, and that's sort of the way I would look at that market. USO did close up this week, 1.2%. It did struggle on Friday, and we get a little bit of a kind of potential ominous pattern here with the way this is flagging higher. Some call it a wedge flag. Don't really care about the labels so much as the price action. And when I look at this price action, this was the last impulse leg to the downside. So we saw a 15.5 down to 1380, and now we're getting about a 30-40% retrace. If we started to break down on volume here, you could argue that we have a second leg lower in USO, potentially with a date to retest the June lows down here. Hasn't happened yet. It could recover. It could stay, it could stay bid up here and continue to float higher, but I'd be a little cautious, and I'd be paying attention to this price action because it is nice and tight here, and I do think it's an actionable short if it starts to break down. Next up, natural gas. We got a little bit, kind of really the exact opposite price action. We got this nice, kind of flag going here. Well, not opposite in the sense that it is the same direction. It is another wedge, another flag here, but this has already come down. This has had an even bigger sort of impulse leg to the downside. It's back to these lows here, and it is trying to recover, trying to work off these oversold conditions. So kind of the same boat. Natural gas also, if it starts to really break down here, sees a high volume, move back below 2250 or so, I'd be, suspect of it. I'd say that is another opportunity there to get on board of the short side for natural gas. Finally, on the metals, really just slept all week, moved sideways here. They've been beaten up, they've stayed beaten up, and they are just, I guess at best here moving sideways and trying to cling on to the recent lows that we made last Thursday, but still looks like it's in a real tough spot for gold. Not seeing too much interest there one way or the other, and silver is very much the same situation, just moving sideways, fairly lifeless this week, and is still in a tough spot with all of these declining moving averages and pressure to the downside. So with that, let's get into some of our individual sectors. Let's look at what held up best, what was the weakest, what was the strongest this week. If we sort it by the weekly performance, we have energy on the top of the leaderboard here, 2.32% to the upside for the XLE, and you can see here it's starting to look like a fairly constructive sideways consolidation here. Remember, we had this big run from April through May into, I guess, mid-May or so, and then we saw a little bit of a pullback, and now we're moving sideways here. So we're working off this nice 2-month rally, month-and-a-half rally. If this starts to continue to collect itself, continue to tighten up, and start to resolve itself higher above, say, $78, $79, this could be a structural, nice, intermediate term kind of weekly breakout play here for XLE. So don't count it out. Keep paying attention to those names. I've seen a lot that have been hitting my scans that are still holding up well and are starting to break out, in fact. So XLE does look interesting. It's still moving sideways, though. We don't have a breakout yet, so don't get chopped up. If you're taking positions, understand where you're taking those positions from. Next up is XLI. This was up 2.11%. This makes sense. The Dow Jones was really the leading index or major average this week, and XLI as a sector, the industrials, makes, certainly help fuel those gains. And while this rally is real nice, it is coming into some intermediate support here, resistance, multi-month resistance up here right around $77. This is where XLI has been failing. So it is kind of stretched, overbought, rallying into resistance. I'd be careful if you're chasing that. And then finally, financials, very similar comments here. This had been the weakest of the sectors for a while now. It still is the bottom tier for 2018, and again, it has rallied nice and strong into resistance. This is where it's been failing throughout April, May, and June, so I'd be cautious chasing financials right here into this resistance as it is a bit overbought. Next up on the downside, we have biotech, which really got slammed this week. If we look here on the weekly chart, it is still holding up in this nice weekly uptrend here. It is still above a rising 8-period moving average, but it was down 2.5% on the week here, and we did get this nice kind of sideways consolidation that it broke down from. So we have this little mini kind of top consolidation that it is resolving lower from. There's an open gap here back from the 6th. So it's on the bulls now to put up some type of higher low. For me, I'd want to be cautious until it started to reclaim really, 118 and get back into this old range. Technology, second weakest this week here. You can see down about a 1% on the week and starting to break some structure, losing the highs here that we made back from June. So we topped out here in June. We saw the pullback, market broke out above it, and now we're starting to reject back below it. So for XLK, I'd really like to see this back above 72.25, 72.50 as fast as possible if this is going to remain bullish. And XLY, the consumer discretionary, 0.5% to the downside here. Really not a lot of structural change at all. It's still moving sideways here. So we get that nice little sideways choppy range. We got this one right here. So how, the next move, the next kind of resolve here is going to be interesting. If it loses 111, then, sellers certainly going to be in control here on this breakdown. Looks fairly actionable. And if it can collect itself, though, if it doesn't break down and starts to move higher, then, this dominant uptrend that has been in place since the beginning of April, right in here, is going to be still very much intact. But you can see you got kind of a dual inflection point here. You get the bottom end of this range, you got the lows here as well, and then you have this trend line of support. So XLY, pretty important area here for this ETF heading into next week, this area of the market. And that is it. That's what I got for this week. So a little bit longer on this video, but there's lots to cover. It's a mixed market out there. I know opinions are high, and you know, on this market either rolling over or continuing to stay bid. Keep a level head. Don't get don't get too attached to the narrative. Listen to price, and careful not getting chopped up out there, because it is a bit of a challenging environment. Even though there hasn't been a ton of damage, it is still a choppy environment for the active traders out there. So that is all I have. Thanks so much as always for watching these videos. Do subscribe to our YouTube channel if you like the videos, and that is it. So have a great weekend. I will talk to you next week.